Welcome to the Broker Podcast with Jack Stapleton, founder, co-owner, and broker of Realty Texas, one of America's most respected independent real estate firms. Early in his career, Jack was named Realtor of the Year, top producer, and helped over 1,000 families buy and sell properties. Later turned industry leader and broker, Jack founded Realty Texas and built it into an empire with over 400 agents, tens of thousands of transactions closed, with billions in production. As former board president, NLS chairman, real estate instructor, software engineer, and technology innovator, Jack knows what it takes to succeed at every level. Welcome to the Broker Podcast.
So welcome to the Broker Podcast. With me today is Kevin Meyerhoff with Next Level Lending. Kevin, thank you for being on the show.
Thank you for having me, Jack.
How long have you been in lending?
I have been in lending since the spring of 2021. So we're coming up on 4 years here, 5 years actually. When I first got my license, I was working for Realtor.com, working leads programs. Mm-hmm. And so I looked into lending, title, and being an agent, and kind of happened upon my lifestyle fit being a lender a little bit better than the other two. So yeah, we've got a good amount of experience now, not just in years, but I always remind people, just like an agent, a lender can say, oh, I've been doing this for 10 years. Well, how many files a month do you do? How many files a year do you do? There are agents who've done 30 or 40 files and they've only been an agent 2 or 3 years. There's agents that have done it 10 years and not done 30 or 40 files. So experience comes with file count, not years.
Wisdom comes from file count.
True. Yeah.
I always like to throw out there that difference between wisdom and knowledge. Knowledge is knowing that a tomato is a fruit, and wisdom's knowing not to put it in fruit salad.
Yeah, I've heard that. It's great.
Yeah. Yeah. So is it what you thought it would be?
It is. I believe there's about a 75 or 80% fallout rate in the first 24 months. I think it's very similar to agents, just people who
just wash out
because of it's commission most places.
Mm-hmm.
But that's also gives a person the ability to make really good money if they want, The freedom of time is my favorite part of being a lender.
Freedom to work all the time?
Freedom to work all the time, yes. So I have 3 small children, so my mornings are typically family stuff. And it is nice that I think by nature of the industry, agents aren't up and at 'em and doing business at 8 o'clock, and neither are clients really, but it gets really heavy after lunch. And a lot of times into the evenings then, into the 6 or 7 o'clock hour. And I had clients last night at 10:45 sending me properties.
Sure.
And, have to get numbers to them as soon as possible. So it is pretty well what I expected, but the market's been a little tougher. I got in when things were refi booming and there was, lots going on. And about the time I got a grasp of how to be a lender and how to prospect and find deals, rates kind of went up. And then so far, I've been told that, it's kind of one of the worst but the worst markets we've had in the last, 20 or 25 years. So still making a good go of it, but it has been very challenging.
I think the interesting thing about the real estate profession, lending included, is that it changes on a dime.
It does.
And it continually changes.
Yes.
I've been in it now for 23 years total, and I've seen the 2005 market, the 2008 market, the 2015 market, the 2020 market. And it seems like every decade, half of it's good and half of it's struggling.
Yep.
And it seems like those swings just happen on a dime. And I've always learned that there's, at least for real estate agents, which might be different for lenders, because the way we approach real estate is there's no such thing as a bad market. It's
very
just
true.
Who the market favors.
Yes.
And if the market is favoring sellers, then most likely it's going to put the lenders at a disadvantage than those times when the market's favoring buyers.
Correct.
So you've got some challenges on your side that we don't have, and vice versa.
New build is one of our biggest challenges.
Could not be more challenging for you with the incentives and the rate buy downs that they're throwing into the market. I mean, they got to figure out how they're going to work their business. Mm-hmm. Competition is out there, and the interest rates went up faster and higher in post 2022 than we've ever seen before in the history of the country.
Yeah, very volatile. That's probably one of the harder parts about even knowing the business now is that volatility of rate. If you look back 8-10 years ago on the graphs and the charts, rates did, this throughout the month. It was very gentle. And now the amount of swing we can have in a week, it either puts you in a great position when you're competing against other lenders, or you're at a disadvantage. And trying to set that expectation to clients that, like, when you shop, it's got to be within a day or two, because
and the importance of blocking.
Yeah, the rates they can change dramatically in a week's time.
I mean, yeah, it's a make or break week. I can imagine that's a lot of stress when you help open files and people are trying to quote, and all of a sudden next day it's like, yesterday was bad, but we got some bad news for you.
Yes.
Those are not fun conversations to have. I think when you look at interest rates, 2020 into 2021, our market doubled in price. But that does nothing to the payment compared to the increase from 3% to 7%.
Yeah.
I mean, that's where the affordability crisis really hits. So then you've got this increase in price, which is an increase in taxes on top of an increase of interest rates.
And insurance. Insurance has gone crazy. Central Texas, I don't know about the rest of the nation, but Central Texas there's a lot of insurance companies pulling out of Texas.
Yeah.
There's a lot of insurance companies not covering properties over $750,000, especially when you talk about Bastrop area, the Pines,
the fires,
and out in the Hill Country. Yeah. So if you're building a house in the Hill Country, be prepared for a high insurance premium, and you may actually have some struggles finding a company that will give you a policy on a $1 or $1.2 or $1.5 million home.
When those agents get into their financing period or their option periods, they really need to be reaching out to an insurance agent and getting a binder of insurance to find out, is it insurable?
Yes.
What it's going to cost and what that's going to do to the payment, because sometimes that single property even might have a higher rate because that property has had specific events happen in its past too. So
correct.
It's not just what's the average. You maybe picked a property you liked and kind of had an understanding of what the general insurance would be for that price range. You can pick a specific address, and that property have had hail damage and hit by lightning and all the things, and it'd be much more expensive than its neighbors.
I have been caught on a file or two with, we estimate insurance, but then when we actually get a view at the house, the roof is 8, 10, 12 years old, and a lot of companies aren't even offering coverage for that roof anymore.
Yeah.
That's the most, your roof coverage is the most expensive part of the premium. And so a lot of times when policy should be $150 or $160 a month, if we talk about a 10-year-old roof, it's probably going to be $250. And for some people, that's $100 a month jump is too much.
That throw my DTI?
Yeah.
For sure.
So that's what I've done in that case now is I have started to, if we're close on a file, I have an insurance guy that I refer to for every file, and I shoot him the address and the client's information and make sure that we're pretty accurate on the estimate. Not only for the safety of the file, but comfort of the client. When you quote them a number per month, it's really nice to stay at that or slightly below. So try and pad that a little. And so I've been getting insurance quotes before we make offers on properties just to ensure we know exactly where we stand.
I mean, clients don't like surprises. So, we got to give them as much information as we can to protect their ability to purchase, so we don't end up with a heartbroken client and someone who, is upset at us and doesn't want to work with us on the next one because something changed that you didn't have control over.
Yeah.
So that's where the wisdom comes in, I guess.
It is a trial by fire. You don't learn that stuff. Champions is a great place to go get your license, but
that's right. You don't learn
these niche items and files, more files. Every scenario it's like fingerprint. Every common FHA file is a little bit unique in its own way.
Yeah. And the same thing on our side too. Every single transaction we do is, it's got an HOA, it doesn't. It's got conditions of the property, it's new, or it's got different type of financing type. Every single transaction is its own unique fingerprint, like you said.
And a learning point, an experience point. So I do like to have files that are challenging sometimes or unique things that happen, because it is another tool that you can put in your bucket to avoid problems in the future. We do a weekly meeting with our team to try and pass along some of that info. Hey, I ran into this. It was a mistake, or this was an issue on a file, and so you can try and prevent that in the future for other loan officers.
That's important because, you don't want to cut your teeth on a client. So having wisdom from other people helping you avoid those pitfalls and learning from their competency is a really big deal, because you're right. Every single time you get into a file, there's going to be a guideline. There's going to be something that, is going to be, you're going to walk away with, a new nugget of information that you take on to the next one.
Correct. Yes.
Well, I got a couple questions here that I want to throw at you. So first, sort of to kick off the first set of questions, what should an agent truly look for when they're choosing a lender? And this is, beyond the team and the rate sheet, what just in the human being themselves, what qualities and capabilities make the biggest impact on a lender?
It's a great question, Jack. And, one of the biggest things that agents should look for, and I think you don't even have to tell them to look for it, they desire it, is communication. Somebody who, it sounds so simple, someone who answers the phone and can get back to you in a timely manner. Not the next day. I even don't like to let people wait the day to call them back. If you call me, there's a fair chance I can't answer because I'm busy, but I'm going to text you right away. And so it's communication. If you go talk to most agents, that's the number one thing that they look for in a lender. Just like in life, marriage, business, your work life, communication is really, really key, and a high level of communication. I've never met an agent that doesn't want a high level of communication, and clients are the same. They want to be informed.
A friend of mine has a quote about this. They say, choose a lender who you can find and choke.
We're here in the office. So, yeah, communication is something that an agent should, be the most concerned about. Because it's not as pertinent in this market, I don't believe, because there is a lot of inventory. It is fairly buyer friendly. If you're out there shopping, you're most likely the only person looking at that house. But if we get into times, or back when we were in the times of, Sunday morning, your clients find a house and offers have to be in by Sunday at 5.
Yep.
It's not just the fact that you need a pre-approval letter for that amount. You need to also go through the loan estimate with the client, make sure that we're making an offer on a house and they know exactly what we're going to be spending in assets, what we're going to have for a monthly payment. And you got to do all that on a Sunday afternoon. And so it's really important to have that communication level. And
I think that it's not just a good market, bad market scenario. I think it's that there are certain files that have challenges.
Mm-hmm.
And there are times where, you are up against a lender deadline or financing deadline, or, the lender has uncovered an issue, or one of the parties have. And now the listing agent is trying to get clarity because they want to do an amendment to whether they're going to sign an amendment. And sometimes when a lender goes dark or disappears, it's because they're trying to figure it out. And they're trying to come up with the answer so that they don't have to tell someone on the phone the bad news or say, I don't know. So they kind of just go dark for a little while and try to deal with that on the back end, and then kind of surface after they kind of have figured it out. Either, they figured it out or they haven't, and they're delivering the news one way or the other. During that time, the parties, you're adding massive stress.
Yes. And so I was going to say, I know a lot of people, other loan officers that operate that way, and professionally, I don't think it's great. There is a fine line there. If I discover a little issue on a file Monday morning, I don't call my agent and my client right away, because if it's something very minute that we take care of on our end, there's no sense in stressing them out. I get the problem solved, and then I let them know, hey, we ran into this morning. It's already taken care of. I just wanted to let you know it came up. And in the case that something big happens and there is a major problem on a file, the first one to say, we don't know what the answer is yet. We're working on it. I'll keep you guys updated, because you can't leave people in the dark. I mean, that's how agents get frustrated with their lender. That's how clients start looking at maybe working with somebody else,
right?
For a lender. So,
well, and for us, I'm very particular on the partners and trades that I partner with. I need to know that the agents, the lenders that I'm working with, is communicating real time with my agents, so we can be advising our clients. And if that's not something that's within their business model, then we can't work with them.
Right. I mean, there's earnest money on the line, and it's not chump change. Thousands of dollars.
There's money on the line. There's that, but there's also goodwill, reputations.
Yeah.
Which I'm happy to throw earnest money at a client to pay it back if they've lost it, but it's a reputation.
Yeah.
And then you just layer on that these guys are moving. You have 3 kids.
Yeah. It's a massive undertaking
That's right.
Yeah.
You got to figure out, a lot of people are working from home. Point A to point B is, I need to get the essentials, the internet set up, the stuff for kids and laundry and food and all that stuff. And if there's going to be even 1 day delay, it can be a catastrophe.
Yes.
I mean, we've had situations with moving trucks sitting in front of a property, and for whatever reason, we can't find, not with you, but just with situations that have happened, even with us as a listing agent. And the stress that causes every 15 minutes, this feels like an eternity.
It does. And, unfortunately, some things can't be avoided, some things, just those unique scenarios. I had a file some time ago that there was actually some additional liens and some fraud alerts on the OFAC report for this said lady. And when I had spoke to her enough, and she was well off, she was, very savvy financially. And so all these negative items didn't make sense. So I had to call her and be like, what is all this? It wasn't even her. It was somebody with the same name, with a different social, but it delayed about 2 days because title was like, hey, we can't do much here until we figure out what is owed, why, who, and so, unavoidables, but same thing, level of communication, so everybody understands what's going on. And I always tell people that as long as a lender did a good pre-approval, every deal has the ability to close regardless of the issue during the file if everybody's willing to play ball and give us some time.
Right.
Almost everything can be solved if we have enough days.
And that goes back to the original conversation of working with the agent and the lender as a team, and the agent not picking the close date.
Yeah.
Letting the agent get with the lender and having the lender provide an estimate of, I can close by this date, looking at how many business days are between execution and closing to give you guys enough time to do all that you need to do. But I'm guessing that you're handed a few hot potatoes now and then where you got to, for whatever reason, they executed it 2 days ago and haven't given it to you yet. Now you got 8 business days to work this all out, and people are calling you screaming, how come you can't get this done, and mad that you didn't get into the closing table? So how do you handle those situations?
So a lot of times, thankfully, I always fall back on the guidelines. People can get irritated or upset, but I don't take it personally because I'm not the one who makes the rules. The rules are what they are. And so we have to kind of let them know that I call it, pay to play. We have to play the game if we want to win in the end. And so even though sometimes things are challenging, confusing, not understandable, the government is involved in writing regulations and guidelines for real estate. So some of them don't make complete sense.
Well, and also someone out there's an investor with this money.
Yes.
And someone is handing over hundreds of thousands of dollars, and they have to have some assurances that this buyer has the creditworthiness worthy of that. And the house
and I generally will call it passing the buck here. When people say, well, I don't know why your underwriter won't accept what I gave them. And I'm like, hey, just remember, my underwriter is like a judge. They interpret the guideline and they have a little bit of leeway there on what they can accept. But the person writing the rules is the investor. The person who's going to hold the lien is who's making the rules. And if they want a document in a certain form, they have to have it that way. And so I kind of, put that on the investors. So if somebody wants to be upset at someone, it's not at me, it's not at the agent, it's not at my underwriter. We're simply here to facilitate the transaction. I actually kind of like to try and remind people that, especially agents who are buyer's agents, they're not salespeople. They're not selling that person that home. It's not their home. They're helping facilitate the transaction. I am not a salesperson. I help facilitate the loan. I'm an originator. So it does come up some, and mentioning, those tough conversations kind of brings me back to the original question of what agents need to look for. Really, you need to work with a lender that you like. You need to have a personal connection with somebody. Even if somebody's great at their job, if you don't like that person, if it's not somebody you would go out to lunch and go to dinner with or have your family around, it's going to be tough when you have your first bad file or your first bad go.
Sure.
I can tell that agents who I don't know very well, haven't had a chance to build rapport with, if something goes a little bit wrong, it's a little bit harder to explain that versus Lisa and I have had a tough file together, and things could get pretty bad there, and her and I, we don't point fingers.
Never.
We get along. She understands the business. And so having somebody you like and get along with, consider them a friend, and it really helps ease some of those communications, because some of those conversations are hard to have. They're tough to call an agent and say, hey, this come up and I'm sorry, whether it's my fault or not. This is the boat we're in. And if you had that friendship, that bond, I think that can hold your partnership together and keep you both on a level plane to solve the issue.
Everything is a relationship business. This, whether it is lending or it is, everything is, we always go back to say everything is promotion and everything is relationships, and bonding those relationships, not throwing each other under the bus, not pointing fingers, taking accountability and responsibility and owning it to the client. They deserve that. They deserve a professional that's going to own it. I've always looked at the originator and the underwriter as two people at war. The underwriter, I always looked at as someone who's there to protect the institution.
Yes.
And the originator, someone there to try to figure out any which way the institution can say yes. And the underwriter is looking for any which way that they can say no. And the relationship between you and the consumer is, I got your back. We're trying to figure this out. As long as we're not committing fraud together, I'm going to do whatever I can to try to get this loan approved. And so that kind of goes along with the agent. Everyone is trying their best to work in good faith to get the transaction closed. And you're right. The underwriter is going to come back and they're going to look for any reason to say no in all those conditions. And we got to go solve for X.
Yeah. And luckily, the company that we're currently with, this is part of why we came back to a Texas local company and a little bit smaller company. I can call my underwriter right now, and if we have a problem on a file, I would argue the other way that she will help me find an answer. So yes, they do look for the no's. That way we don't get caught by the investor. That would create a buyback, which I explained to people. For those of you that don't know, a buyback is simply if we produce a bad loan, and let's say it's a $350,000 loan, we can't sell it. You do that too many times and that starts to add up.
That's catastrophic.
8, 10, 12 million. Yeah. And so,
because you have to portfolio those.
You do, or if your company isn't capable of portfolioing that loan, then you have to scratch and dent it and you sell it for 65 or 70 cents on the dollar. Well, you just ate your 90 grand. Yeah. So it is very important. But I am fortunate that my underwriter, when we have issues or challenges, I have seen her more times help me solve a file than I've seen her turn my file down. So best way to prevent that's a good approval. Have those questions in the beginning. Know what you're looking at in the full picture, because there are some files, if they get too complicated, those go to the underwriter before we have a contract. We call that a TBD underwrite.
Or your manual underwrites.
And we do manual underwrites, but this is simply the underwriter's going to go through and they're going to do the income, the employment verification, the asset verification. And typically that comes in with people like bank statement loans, I-10 loans, or some other unique ones. Self-employed borrowers can be very challenging. And so a lot of those files we send to the underwriter before we have a contract. That way, when I get the contract, there's no chance of any surprises there.
I mean, if you can get true buyer approval, and then you're subject to the appraisal, and that is a really big deal, because just like you said with insurance, it's not guaranteed even then.
Yeah, no.
So one of my questions, which you kind of touched on, so I'm going to skip ahead a little bit, is really how important is in-house underwriting?
In-house underwriting, we have had personal experience with. It is very important. I will admit that in a slower market, it's not quite as pertinent.
Is it the same for you as a real estate agent getting frustrated because they can't get a hold of the lender, kind of like the lender getting frustrated because they can't get a hold of underwriting?
It's exactly the same. And nobody's going to do your job as good as you if you're good at your profession. Other people can say they care. Other people can have good track records professionally and have, a good reputation. But, when you send a loan to a big box bank, you're just a number to them. You're a file count, and they will get to your file when they feel like it. And if they take off at noon on Friday because of some event, you're not going to get told that.
Yep.
You're simply not going to have an answer. and then try and call them after 5:30. Your account rep's not even going to answer most likely. So it is challenging. All those non-in-house underwrites are all brokered loans. We do a lot of brokered stuff. I tell my agents, we always, if we're going to be brokering a file, I prefer to have 35 days.
Anytime.
Yeah, we need a little more time because there's a third person involved. Instead of me submitting it directly to my underwriter, I have to submit it to a portal, and then their processor who works on her time frame and pace gets over to their underwriter. And so it's more steps, more people in between. I could submit a file to my underwriter today, and I could have conditional approval tomorrow afternoon. You submit that to a larger lender that's a broker. You may not have an answer for 2 or 3 days.
Sure. That's a big deal.
It's also one of my things I like is other places are big on, they'll say, nope, this doesn't work. But are you going to have a chance to talk with that underwriter and say, hey, how do we solve this? Or what can we do? That's one of the biggest wins with having good underwriters that are local here in-house is being able to get those answers, because those gals down at Home Trust in Houston, they've been doing this for 25, a lot of them 30 years. So it really isn't a scenario they haven't seen. And they know there's where the gray areas are and how much we can operate in that gray area and still have a solid file. So in-house underwriting was one of the top 3 key points that we looked at when my group was looking at a new company.
Yeah.
Somebody in Texas local and somebody that has in-house underwriting and dedicated teams. That's another.
And processors.
That's, yes, as important as underwriting.
Almost more important.
Having a dedicated LOA and processor is extremely important, because you need time as a loan officer. You need time to contact your client, contact your agent. You don't need to be spending all day in a file crunching and working the numbers and collecting documents. That is for the support staff to do. And so it is important to have a team, and things can go quite well. I get the opportunity to do things like this. I still have files being worked, thankfully to my team, yes.
Well, and the team is a huge asset. 'Cause I can tell you from the real estate agent perspective, I've had multiple times where I'm working with a great LO, worked with them for years. They changed from one company to the next, and next thing you know, my client is furious. The lender that I've never had a complaint from, and it's because the processor is making things overly difficult for the consumer, because they're not explaining why they need the bank statement again, because they keep sending the same document over and over again. But it's because, this page intentionally left blank was left off, and they're asking for page 7, but they just keep getting an email that says we need the bank statement, and they keep saying, I sent it.
We need the full bank statement. They're like, I sent it. Yeah. And that's really, I would say that's where the point of having a smaller company, I think, is an advantage. Is the more corporate you get, the less time people are going to give to those personal items. My LOA is very good at, she will call somebody and walk them through how to do electronic signatures, how to email something, how to fax something in or scan something in, because there are a lot of people out there that it's a new process to them. It's, real estate seems fairly easy to us because we do it every day, but I look back before I was in the industry, and it's a foreign language. And so you need somebody that can explain, we all need reasons why. I think as much as some people don't ask it, we all want to know why. And I'm one of the worst about it. You can tell me that you need all 7 pages and the last 3 pages are blank. Why? The investor requires all pages to be there, 1 through 7, even if they're blank, preferably with the URL at the bottom. And the reason this exists is because fraud is rampant in most industries and unfortunately in real estate. And so I always have to point out, I don't think you're being fraudulent, my client, but someone in the past has made fake documents or didn't provide it all, and it created a bad loan. So therefore we have the rule now. And I've noticed most 9 times out of 10, if you explain that to someone, that's 1%. Okay, I understand. I'll get it to you. And a lot of times I even agree, like, hey, look, I know this is silly or this looks redundant, but we have to pay to play. We have to do it.
Just the processor picking up the phone and having a conversation and explaining to them why, then the issue's mute and now they're moving on.
Yeah.
But if they don't and they just keep asking for it, then the person starts feeling like no one's listening to them.
Yeah.
And it just gets monotonous and they get frustrated.
Yeah.
So let's talk about rates. I think that's probably been one of the biggest conversations in real estate for the last 18 months or so. And, we've seen, reports just recently of quantitative easing and what's going on with the Fed actually reducing rates. And sometimes a 1/4 point, 1/2 point rate reduction from the Fed doesn't actually make its way to an interest rate reduction for the buyer,
unfortunately.
So let's talk about that.
So we are in a higher rate environment than we were during COVID, but I think we need to try and educate people on the fact that rates during COVID were an oddity of probably once in a lifetime.
Free money, basically.
Yeah, we can't say it'll never happen again because that's just silly. You shouldn't say that about anything.
But we can't say that was, but in the history of the country, we've never seen rates like that.
No. And I remind people, as much as we may want that, something bad has to be happening for our economy, for the government to justify, yes, basically giving money away. Because when mortgage rates are 2.5 or 3,
it's not healthy.
The Fed rate is like, I want to say it's actually been negative before, which giving away free money.
Negative.
And so I a lot of times relate it to the oil economy and the oil market. People all want $1 gas. It'd be great. Our country can't operate on $30 a barrel oil. It just isn't. It's too much of a large portion of what our country, operates on and does. And so we need to kind of get away from hoping rates are going to be back down at that point. I think a lot of lenders would agree that somewhere in that like 5 to mid 5, the low 5 range is good. It shows, that we're doing well still in the economy. There's not a lot of issues, but it does help with buyer affordability because we have such a spike in values. It hurt. Taxes hurt as well. Taxes are not super cheap here in Texas. I try and remind people when they see that monthly tax bill, yes, you're paying property taxes, but if you're a higher income earner individually, you don't pay state income tax. And I come from a state where I paid state income tax, and I would rather pay high property taxes and live moderately than to pay, the state income tax on a good living.
I mean, it's, $1,200 just to have, your CPA do the second return.
Yeah.
So, I mean, it's a lot of things. It's not just that. It's also having to do the return. It's just not a fun thing to have to do.
So, rates we're in a better position than we were 12 months ago. We're in a better position than we were 6 months ago. They're not dramatically lower. We're right around that 6 range for government loans. Government loans being VA, USDA, and FHA. Conventional is always slightly higher. That's pretty common that conventional is around 3/8 to 0.5% higher on interest rate than FHA. The exchange there is, depending on the credit profile of the client, monthly mortgage insurance is more on conventional than it is FHA. And then the funding fee that goes in on FHA doesn't happen on conventional. So you win a few pieces on conventional and you win a few pieces on FHA. And that's why with good qualifying clients, they have choices. It comes down to what they want for their long term, how long they're going to hold the property. I always like to ask clients when they start talking about rate, because rate is important, but in the big scheme of things, it's a small portion of what's important. We've discovered a lot of lenders that can offer the absolute lowest rock bottom rates is because they have a very, very, very razor thin margin, which means they don't pay support staff.
Right.
They're
going to give up something.
It's a business, and it's no secret that rates per company somewhat fluctuate based on margin. Some companies want to sell a higher quality service. You have to make a little more money in your bottom line to pay those people to make that happen. So
also the files that are really hard, they abandon.
Yes.
So that those people don't have a chance.
Yeah. So as much as people want to rate shop, it's great. But I would encourage people to pay a little more attention to the fees, because I can also go, let's say, from a 6 1/8 down to 5 1/2 on the rate. If I charge you a 1% origination fee and charge you points, I could do that too. And it's misleading. People get loan estimates sometimes from other companies, and the rate looks really attractive, but the APR is insanely high. The fees are really high. And when I break it down, they're like, I call it smoke and mirrors. It looks good, but it's actually not.
You got to look at the three things. What is the payment, the down payment, and then the rate? And look at those three things to know what's really going on there.
Yeah. So, and on that topic, I encourage people, including agents, don't review your own loan estimates. They're a little bit hard to interpret. Some agents who've looked at a lot of them can have a pretty good idea. But when first-time home buyers are like, well, we have these 3 estimates, we're going to go through them tonight. Can I join you on that conversation? Because
I always invite my lender.
It can be very misleading to people. Yeah.
I always get with my preferred lender, get with Kevin, and have him sit with you and shop, get a couple of quotes and let him go through side-by-side comparison. He'll be honest with you. If he can't beat someone's rates and it's a really good deal, he'll tell you.
Yeah,
I'll be honest with you.
I wouldn't even say given away. I never had the file, so it wasn't mine to give away. But yeah, if somebody comes to me with an awesome loan estimate, if it's too good, I kind of chuckle and I say, yeah, go tell them you want to lock it in. Come back and let me know what happened. A lot of times they can't. And so, yeah, I've had several files that if somebody brings me a deal that we can't beat, my job, I always tell people my job is not to make sure you work with me. My job is to make sure that you get the best deal for the client. And then for the agent, my job to protect our partnership is to make sure that your deal goes smoothly. So, another little portion of rates and kind of the uncomfortable point. When people say that rates are too high, I generally try and ask them where they would prefer to be. And surprisingly, a lot of people only need like a half or maybe 0.75% less to feel comfortable. And when we look at the average loan amount here in this area, that only comes out to about $125 or $150 a month difference. And so it's not massive.
Well, there's a whole other side of this, that when I have clients that are very rate conscious, I like to remind them that if the rates go down, the price of the home is going to fill up that void. So when the rates are high, they're putting downward pressure on home prices, which means you're buying the home at a lesser amount at a higher rate. And then when the rates go down, you refinance it and get the better rate.
Now you have both.
So now you have the lower price home and the better rate.
Yes.
But if you buy at a lower interest rate, you never can refinance your purchase again.
Yeah. And a third added bonus to that is not only are you acquiring the home at a lower value to allow for that equity growth, you're getting the seller concessions, and seller paying title. And that across the board is generally, I'm going to say, anywhere from $8,000 to $12,000 in value. And that is literally, that's not monopoly money. That's $10,000 you can keep in your savings account.
Taxes are lower.
Yeah.
Because the home prices are lower.
Yeah.
Like you said, the concessions are lower. And when you're in that kind of environment, you're going to have more home selection.
Yes.
So you get to pick a nicer house.
That was one of the biggest challenges that I ran into as a new LO. I was so excited that I had so many approvals my first 3 or 4 months. And I was like, we're going to crush it. This is going to be great. Out of 70 approvals, we had 6 files that got completed. It was because nobody could win all years.
Yeah.
20 offers. Multiple is an understatement, and it was very hard to win a deal. And unfortunately, a lot of those people who did win a deal in 2022 and purchased,
they're suffering now.
You better not want to have to move for any reason, because
sell one right now.
That you're not even breaking even anymore. People are having to come to the table.
$65,000 right now. I've got one that's that they are moving out of country and lost their job and been out of work for 6 months. Their payment's $5,000 a month, and they're pending in foreclosure, and there is no way to come close to break even. So they're looking at a short sale.
That's unfortunate. But you can't predict those things. Don't ever want to down people for buying at that time.
Then there's never a bad time to buy. There's a bad time to sell.
Yes. And even then, I know that life dictates that. We can't just, life determines the moves we have to make, typically, whether it's kids moving out, you're having more kids, you have a job change, elderly folks need to go live, in a little bit smaller home. But, like you said earlier, how real estate cycles so much. If it's not a good time now, just wait a little bit,
if you can house and figure it out. I mean, there's a lot of options where, maybe you just get a part-time job and try to get 2 part-time jobs and rent out a room and just figure out what you can do to sell later when the homes go up, because they'll go up.
I had done the math, and I wish I would have thought about doing it earlier so I knew the numbers a little better, but I want to say if you looked at like a $350,000 property at 4% interest versus what that home appraises for now with the lower values compared to 2 or 3 years ago, when you exchange 50 or 60,000 in purchase value, it is the same payment with a 4% rate at 350 versus like a 5.5 or 5 3/4 at a 290 or 300 acquisition cost. And it comes out the same. It just looks more attractive on the rate because it's lower. But yeah, I want to say in last 24 months or so, I think a lot of places have seen 40 to 60,000 in reduction on value, easy, and that's on the $300,000 and $400,000 homes. You get into the $700,000 and $800,000 homes, it's like 100 or 150,000 in reduced value. So
and the values today are still higher than they were in 2020.
Yeah,
when we had a doubling in value and then went down by 30%. We're still 50% or more. Yeah, above 2020.
And that's also why I try and remind people, they get real worried about like, the housing economy is just going to crash and values are plummeting. It's like, they're really not. They're correcting back to the normal plane. I believe they talk about an
appreciation a month.
Yeah, it's about an average year, I think, over the last few decades is like 4.5 to 6% equity gain year over year. Well, if we look at where homes were at in 2020, and if we remove the giant increase or spike, we're finally back down to right about where we should be. And so, yeah, it looked bad. Austin, compared to the rest of the nation, has had some of the largest value reductions, but it's because we also had the highest value increases in the previous years. So
I teach that graph, and I built that graph continually.
Yeah.
And the trend graph from 2008 all the way up to 2019 was a perfect smooth graph.
Was it?
And then from 2020, it literally shot directly up to twice, came back down, and where we are right now is if that had never happened.
Yeah. So, small note, a lot of people say, 2008 is going to happen again. Watch the movie. Is it The Big Short?
Big Short.
What happened in 2008? It has nothing to do with what is occurring right now. Are we in a down economy or a down housing market? A little bit. There's less sold homes this year. There's a lot more inventory. But the 2008 thing was it was due to bad loans.
It was bad loans.
It was bad loans. Too much investment put in.
Why not?
Yep. So and that's why we have all the guidelines now. People ask, why is the closing packet 130 pages? I imagine when you first started, how long was the closing packet? 30 or 40?
I mean, it wasn't like it is now. I mean, the seconds were, but if someone was getting a first and second, which I don't really see anymore, it was a stack of paper, but yeah, it wasn't like it is today.
Anywhere in life, if there's a rule, it's because somebody tried to break it or tried to, work the system.
And we don't want the system to topple. If you go back to the turn of the century, and I don't mean 2000, coming into these savings and loans, turning into the GSEs, it was 50% down to buy a property.
Yeah.
And you had to have substantial cash to be a homeowner. And so we were a nation of renters.
Yeah.
And it was because of the savings and loan, these investors that were willing to throw money into a system where it was, at least safeguarded.
Yeah.
And then you had that broken, and then coming out the other side of it after 2008, where the guidelines are there to protect the investors, where they feel like they have the proper insurance and the proper guidelines is going to safeguard their money, then, you have a system that's, worth participating in a housing market like this. So we don't want to go back to that.
If you look back on the lack of guidelines and rules back then, the other lenders always refer to it as the wild, wild west. Like,
for sure.
When you look at the guidelines and rules now, I don't even know who thought it was a good idea to not have those rules in the 90s and the early 2000s. I guess because it hadn't broken yet, but it's wild how little they had to abide by.
And I think at that time, people stayed in their home longer.
Yep.
And I think people had a better relationship with debt.
Yeah.
So I think the relationship that people have with debt today, the idea was live in your home and pay off your house.
Mm-hmm.
And now we are a nation of, how many rentals can I buy?
Yeah.
And you buy a bunch of rental properties and the market turns, first thing is going to happen is you're not going to pay their rental mortgages, but you're going to pay your primary mortgage. So that's the kind of stuff they're trying to protect is, that's part of where the guidelines set in.
Yeah. It does get, the guidelines do get a lot more harsh, we'll call them, for investment properties for that reason. And one of the biggest guidelines there is reserves per property. And it can be heavy sometimes. I mean, you own 3 or 4 rental properties and you have to have 6 months reserves, or 3 months minimum reserves for each property. I mean, you're looking at 40 or 50,000 that you have to have just sitting around in those events,
on top of your 20%.
Yeah, on top of your 20%. And rates are a little bit higher on investment properties. So, I think social media and podcasts and influencers and some key people have been a big reason why a lot of folks have, dove into the buying rental properties. And because even I'm a believer in the fact that, I'm not a big investment guy, but I look at real estate as just another investment bucket. Mm-hmm. I know people that they lost all their retirement and their investments when the Enron scandal happened. That was a big thing in my hometown. Companies can go broke. You can lose your shares or your stock. There can be fraud that can occur. What can happen to a house? There's no chance that a house that you and I buy today won't be worth significantly more money in 20 years. And if it burns down, insurance replaces it. If a tornado takes it away, insurance replaces it. If
everyone needs a roof over their head.
Yeah. So I think it's a great way to grow wealth. One thing that people need to realize around here though is you're not cash flowing that every month. It's just really tough to you're not going to make money owning the rental necessarily unless you're making massive down payments and really keeping that principal and interest low, but your equity gain is what you're looking for around here. So I think it's a great avenue for people to get into. And, a lot of folks are buying primary residences, living in them a while, moving on, making that a rental. And that's a good way to acquire, quote, rental properties and not have to have 20% down. It just takes a little bit longer.
If you're in the outskirts in the suburbs, there are still opportunities today that a investor putting 20% down can break even.
Yes, break even. Yeah.
But you're right, they're not going to cash flow. And that's their goal is to, hopefully break even. And then, it all comes down to how long is it going to take to get a tenant in place?
Yeah.
Because they're paying a mortgage.
Yeah. That's, one of the things that we typically try and talk to new investment people about when they're getting a rental, is if you set your rent at $2,000 and you don't have any traction in the first 2 or 3 weeks, lower it. Or if you have somebody come in and say, I'll pay $1,900, you better take it, because if you go 1 month without that renter,
100%,
you're out $1,900.
Up $2,000.
If you take a $150 cut on the rental, that's $1,800 a year. So just do what you have to and what you can to get a renter in place, because the moment you eat a month of the mortgage,
I tell people all the time, if you burn 30 days on market, you've burned an entire month.
Yeah.
And if you're why would you burn $2,000 trying to recoup $100 a month?
Yeah,
it just doesn't make sense. I'm totally with you there. Coming into 2026, what do you forecast the rates doing?
So
shake the ball.
There has not been a lot of talk about things getting dramatically better. We also haven't heard any talk about rates going back up very much. So most everything we see, there has been some chatter about the Fed, wanting to, a month or two ago, they were talked about a few more rate cuts. There hasn't been as much talk about it now, for the first quarter in 2026. But like you mentioned earlier, the Fed can cut the rate, and we've actually seen in the past, the last 2 times they've done it, rates go up the next day. We see our rate gain or improvement on the weeks prior to the Fed lowering the rate. The anticipation of the Fed doing that, it encourages confidence, and not just on the buyer side, but the investors and the people who buy and sell bonds and move the market. And so it's pretty safe to say, unless something super wild in the world happens or with our economy, we're probably about where we're going to be for a while, or slightly lower. I haven't heard anybody talk about things being much lower than like 5.5 or 5.25. Fours are just not on the map at this point. But I haven't heard anybody talk about, things going back up too much.
So buy the house, negotiate hard, get the closing costs paid.
Getting the closing costs paid, that is one of the biggest wins.
Negotiate on price and
Yes.
And get the roof over your head and then hold it and refinance it later.
Yeah. Yeah. And that's, we always like to have discussions with our clients on how long are you going to live here? Because sometimes I have had a client that's like, I want to buy a house. Okay. And got talking to them, figured out, they were here working, and in like 2.5 years, they have a chance for a big promotion where they would be moving to Seattle. And I told them, I was like, do you intend to rent this property out? Like when you leave? No, we'd have to sell it. We need to look at some numbers.
Yeah.
Because there's very, very possible that you'll maybe break even if the market stays where it's at. If the market goes down further, you're going to be in a world of hurt. And so they actually went and rented Brad versus buying. So once again, file I probably could have had. I advised them, hey, you can obviously purchase if you want to, but the moment you purchase with FHA, you put 3.5% down. It gives you a loan to value of 96.5. If you turn around and try and sell the house, you have to pay your agent.
That's right.
And so you're already a little bit in the weeds. We generally see a good ability to have an equity return after year 3, definitely after 5.
After 5 years,
after 5 for sure. And then, that I think the average person stays in their home 7 years now, is about the typical 7 years, and 1 in every 27 people move every year. So it's a big topic. Rate is a very hot topic. But again, I remind people, if you're getting a 6 and an 8, and you're holding out because you want a 5.5, I mean, you can spend $30,000 on rent, which is 100% interest over the next year, or we can, buckle down, quit buying Starbucks, and quit getting DoorDash, and make that extra $125 a month on the mortgage. I would say most people I encounter, regardless if they make $70,000 a year, or I've even the people make $370,000 a year and not have any money. They spend. We are a nation of spenders and credit. Forget it. That is, people have car payments are outlandish. $1,300, $1,400, $1,500 car payments for people that make $80,000 a year. Like that's over half their mortgage.
It's crazy.
It is
not
crazy.
a financial decision for them.
No. So we do pay attention to rate, but I'll be honest, we try and kind of shy away from always talking about rate with agents and clients, because there's so much more to the buying process that's important. And I've even had some people, they specifically verbalize, I really got to make sure this goes through, but I know this other company and I don't trust them. They're offering a better rate. And I've told them, hey, look, you can refi in 6 months. I can ensure that your purchase is safe and that your earnest money is safe. And I know that we can get this deal done in 6 months' time. We'll refinance. And if they have a better rate than me, then use them for a refinance, because a refinance doesn't have all that on the line like a purchase does.
It's 60 days and who cares? But
yeah,
when on an origination side, you've got just specific timelines that has to be respected.
Yes.
And you shouldn't take a chance on your entire transaction closing based on an unknown third party who's offering something that sounds impossible.
Yeah.
It's going to probably end in failure.
Yeah. Which we've seen recently a little bit.
We've seen it recently.
Yes. So
any parting advice you want to give to buyers who are in this market right now and trying to figure out what they're going to do?
Get educated. One, you need to talk to a lender soon in the process. And even if you're not buying for a year or 2, it's important you talk to a lender to figure out if you're on the right path. The last thing that we want is somebody who's got good credit and they've got good savings, and they were working for Dell for the last 12 years. And last year they decided to break out on their own, and they started their company. They're crushing it. They're making great money. They can't buy because they went self-employed. So they're out for 2 years. And so even people that think like, oh, I make $400,000 a year and I've got $250,000 in savings and all that, it still doesn't mean that you can qualify. So, get with an agent, if you have a good agent, they should have a good lender partner. Any agent who's just like, well, get online and shop some rates, that's not the best. So
how can someone contact you?
Several ways. So number one, I'm always here in the office Monday through Friday. Generally come in about 9 or 9:30, and I'm here generally till about 5. We have conference rooms that we can meet in. I imagine we can post my email and my cell phone number. I actually only use my cell phone exclusively for work because company numbers can change. We've gone through a couple of companies in the last 5 years, and I hate that my email changes and that my work number would change. And so that's where the Next Level brand came in. My Next Level email will, regardless of the parent company, that will be my email from here on out. And my cell phone number hasn't changed in going on 20 years. So I'm going to keep it that way.
We will post the number to make sure people know how to contact you.
Weekends and evenings, we work when other people are off work. And people who can buy and have good jobs, they work throughout the day.
They're working.
Right? And they have business meetings and they have things to do, and we got to work around their schedule. So another key point to for buyers, how to get started, we provide first-time home buyer classes right here in the office. Motivated agents here that are really trying to provide knowledge to the community. We do first-time home buyer classes on Tuesday evenings and Saturday mornings. I want to say the Tuesday evening one's around 6 o'clock sharp. And 10:30 Saturday events. So, and if we don't have a class going on, I do buyer consults, and they're generally 45 minutes to an hour. So get in touch with somebody. Stay away from Google a little bit.
Stay away from ChatGPT.
Yeah.
Go to a professional.
Yeah. There's too much information there, and it can be very misleading. There's a lot of times people come to me and let me know they've got it all figured out, and then it's kind of fun to dispel their myths and what they thought was correct. Just make sure you know where you stand, because when you want to go ahead and pull the trigger, we want to make sure that we don't have disappointing news.
Well, thank you for spending some time with us on the Broker podcast.
Yeah.
I'd like to have you out again in the future.
Yeah.
So again, if you have any questions for the broker, I'd like to insert your questions for the Broker podcast, email manager@realtytexas.com, and we will bring your question to the Broker podcast. Thanks, everyone.
Thank you.